Hello, and thank you for watching this International Financial Reporting for Non-Profit Organisations webcast on the proposed guidance model. This webcast is part of a series that provides a summary of key areas from the consultation paper. Among the issues considered in the consultation paper is a proposed model for developing the IFR4NPO guidance. This session explains this proposed guidance model by examining constraints on the development of the guidance that necessitate the use of existing frameworks, jurisdictional level and international frameworks, and why international frameworks need to form the basis of the guidance, assessment criteria used to evaluate the suitability of the international frameworks, how the proposed model will work to develop the guidance, and how the proposed guidance model performs against the assessment criteria. A solution to the financial reporting problems facing NPOs and their external stakeholders needs to be developed on a timely basis. The guidance also needs to provide a coherent suite of financial reporting standards for NPOs. It must cover all of the main economic events and transactions, and not just those where NPO-specific solutions are necessary. Developing a completely new set of standards for NPOs is not feasible within the timeframes of the project, nor are the necessary financial and human resources available to develop an entire suite of NPO-specific standards from scratch. This means that in developing the guidance, we must necessarily draw on existing financial reporting frameworks, and these could be either jurisdictional level or international frameworks. In addition to the constraints on development, there are two further essential aspects of financial reporting that it is proposed the guidance reflect. Firstly, the guidance will have an accrual accounting basis, as accrual-based financial information provides a comprehensive view of an entity's financial position and performance, and it improves the information that can be used to hold management to account and make funding and other decisions. Secondly, it will include narrative reporting principles, as narrative non-financial information provides additional information that is needed for accountability and decision-making purposes. This includes an understanding of an entity's objectives, strategy, risks, and performance. In many jurisdictions, there is no specific NPO guidance available, or if there is NPO guidance, it closely mirrors existing approaches to reporting in the for-profit private sector or public sector without adequately taking into consideration the NPO context. A limited number of jurisdictions have taken a more NPO-focused approach to the development of financial reporting guidance, but these are usually aimed at providing reporting solutions to meet that individual jurisdiction's specific needs rather than with a view to international applicability. And they are also developed within jurisdictional level due process. This involves standard setting bodies consulting on the financial reporting issue to be addressed and the proposed solution with interested parties. Unsurprisingly, jurisdictional level due process does not extend to full international consultation. The objectives of this project include improving transparency, consistency, and comparability of financial reporting. A single set of guidance must therefore be developed that can be applied both within a jurisdiction and across jurisdictions globally. And regulators may be better able to consider adopting the guidance if it is designed to be internationally applicable, has consistency with international accounting standards in other sectors, and draws on robust international accounting standard setting due process. There are 3 international reporting frameworks that provide accrual-based financial reporting standards. These are International Financial Reporting Standards, or IFRS standards, which are a single set of globally accepted accounting standards that aims to bring transparency to private sector reporting by enhancing the international comparability and quality of financial information, strengthen accountability, and contribute to economic efficiency. IFRS standards are developed to be used primarily by larger for-profit entities that are traded on public exchanges or hold financial assets in a fiduciary capacity, for example banks. The IFRS for SME standard is a single standalone standard within the IFRS suite of standards. The IFRS for SME standard provides simplified reporting requirements for for-profit organisations, with all the relevant requirements contained in this single standard. The IFRS for SME standard is designed to meet the needs of for-profit entities that are not traded on public exchanges or hold financial assets in fiduciary capacity. And International Public Sector Accounting Standards, or IPSAS. IPSAS are a single set of accounting standards for use by public sector entities around the world in the preparation of general purpose financial reports. IPSAS aim to enhance the quality and transparency of public sector financial reporting by providing better information for public sector financial management, accountability, and decision making. The IFRS for SME standard is aligned with IFRS standards, and alignment with IFRS standards, where appropriate, has always been a key pillar of the IPSAS development process. And the conceptual frameworks underpinning these standards have much in common. This means that although there are some differences between the frameworks, for many transactions and economic events, the financial reporting standards are similar. All of these international frameworks have also been developed through thorough, transparent and participatory due processes that have global acceptance. So using these existing frameworks as a basis for NPO financial reporting could therefore harness their respective hierarchies, structures and legitimacies. This would provide credibility to the NPO guidance that we are planning to produce. For these reasons, it is proposed to use international frameworks as the primary basis of the guidance. But which of these international frameworks provides the best basis for the guidance? To determine this, 3 criteria have been developed to assess the suitability of the frameworks. These are: A. To what extent does the framework provide guidance on the key NPO-specific issues? This is because a framework that already provides NPO-specific solutions will be of more use than one that is silent on these issues or requires accounting treatments that are not appropriate for NPOs. Where guidance already exists, it could mean that the development of the guidance can be accelerated and will have already been through robust standard development processes. B. Will preparers, auditors and users be familiar with and easily able to use the framework? If there is familiarity with a framework, this may make it more likely preparers, users and auditors will find it easy to use, and may make it more likely that the community will be willing to accept it. And, as the project is aiming to reduce reporting burdens, frameworks that provide simplified principles, have requirements that are appropriate for NPOs, are easy to understand, and are revised only on a periodic basis, are likely to be more useful in the NPO context. And finally, C. How feasible will the development and maintenance of guidance under the framework be? This is because frameworks that have less complex and fewer accounting solutions, have disclosure requirements that are more appropriate in the NPO context, and which are subject to less frequent revision, will have lower development and maintenance requirements. This means that practically using these frameworks are likely to be better aligned with the resource available. We can assess the extent of guidance on key NPO-specific issues provided by each international framework by examining a range of NPO-specific issues that have been identified as part of the broader project. Here we are focusing on whether the framework provides guidance that is relevant to the reporting issues faced by NPOs, and, if so, whether this is only partially or fully applicable in the NPO context. As you can see, none of the frameworks address all the key NPO-specific issues, although there are many areas where existing guidance could potentially be utilised in the NPO context, because they are partly or fully relevant to the NPO issues. IPSAS does seem to perform better overall, particularly in areas related to incoming resources from what we call non-exchange transactions. This is where an entity provides resources to another without expecting anything of equal value in return, which would happen if you were purchasing a good or a service. Non-exchange transactions include, for example, grant income and volunteers' time, and accounting for assets that are held because they are needed to deliver services rather than for cash generation, as would be the case for for-profit organisations. Examining now familiarity and ease of use of the frameworks, we can see that each has advantages and disadvantages. Full IFRS standards have complex accounting principles and disclosure requirements. This would likely place significant burdens on NPO preparers and auditors. And while IFRS standards are used in many jurisdictions across the world, this is mainly by relatively few larger private sector entities. So for most NPOs, it is unlikely that preparers and auditors will have regularly operated with or be familiar with the requirements of full IFRS standards. The IFRS for SME standard, by contrast, has simpler accounting principles and disclosure requirements, although we need to acknowledge that some disclosure requirements may not always be sufficient in the NPO context, given the potential for higher requirements of accountability that can be applicable to NPOs. IFRS for SMEs is also written in clear, easily translatable language. Surveys have identified that IFRS for SMEs is used in fewer jurisdictions than full IFRS standards, but as there are many more SMEs than larger organisations using full IFRS, this may mean familiarity with the IFRS for SMEs standard could be higher than a simple comparison of jurisdictional use figures suggests. While simple and clear, there are though gaps in NPO-specific topic coverage. As noted earlier in this presentation, IFRS for SMEs doesn't provide all the answers for NPOs. Finally, we have IPSAS. IPSAS are less widely used than the other frameworks at present. This is because whilst many governments are moving to accrual accounting, currently there is relatively low use of accrual accounting by governments and public sector entities globally. And the same complexity issues that exist with IFRS standards are true, both in terms of the accounting principles that the IPSAS standards require and their associated disclosure requirements. Overall, this analysis shows that there may be challenges associated with each of the frameworks. However, the IFRS for SME standard seems to offer some significant advantages, as it is a single standard designed to meet the needs of a broad range of entities, that has been written in plain English, and is aligned to the conceptual framework for IFRS. The final assessment criteria is feasibility. A number of IFRS standards have different accounting options available, which means that standards do not always have a single accounting method for each accounting issue. Full IFRS standards also have extensive disclosure requirements. The suite of IFRS standards is also subject to an ongoing process of change, with frequent updates being made for new standards and amendments to existing standards. This drives complexity and, with potentially frequent changes, would mean a significant amount of work to develop and maintain guidance based on full IFRS standards. IPSAS has similar feasibility issues to full IFRS standards, as it is also complex, has significant disclosure requirements, and is subject to ongoing development and updates. By contrast, the IFRS for SME standard is a simplified framework that is updated on average every 5 years or so, with requirements that are not relevant, removed, or requirements tailored to meet the needs of smaller entities. Developing initial guidance from a standard that is approximately 250 pages as opposed to the approximately 2,000 pages that comprise full IFRS standards or IPSAS, would be much easier. And, once the guidance is developed, it would not need to be subject to a continual monitoring and update. This is because updates to the IFRS for SME standard are periodic rather than continual. These factors would be expected to reduce the resource required to develop and maintain the guidance. When assessed against the suitability criteria, each of the international frameworks displays different potential benefits and challenges as possible basis for the guidance. On providing guidance on key NPO-specific issues, IPSAS performs well. On familiarity and ease of use, the IFRS for SME standard has some advantages. And the IFRS for SME standard would also appear to require the least initial and ongoing resource to develop and maintain the guidance. All three of the international frameworks also have key advantages over those developed at a jurisdictional level. This is because, unlike jurisdictional level frameworks, international frameworks are designed to meet the needs of multiple jurisdictions and are subject to international consultation. With these advantages and disadvantages, the project is therefore proposing a model for the development of the guidance that optimizes the outcome against the assessment criteria. The IFRS for SME standard is suggested as the foundational international framework for the IFR4NPO guidance in this model. This is on the basis that it provides a shorter, simpler, standalone standard with reduced disclosure requirements and accounting requirements that are expected in most cases to be appropriate for the NPO context, is aligned with full IFRS standards, including its conceptual framework, and developed in compliance with the IFRS Foundation's due process requirements, may have an acceptable level of familiarity and acceptance amongst regulators, preparers, auditors, and users internationally, and is the most feasible solution, as it would require the lowest level of initial and ongoing resource to develop and maintain the guidance. However, IFRS for SMEs doesn't provide all the answers, so where the IFRS for SME standard is silent on NPO-specific reporting issues, or does not otherwise provide appropriate and/or sufficient guidance, the proposed model draws on IPSAS and full IFRS standards, and their broader conceptual frameworks. This would enable the development of sector-specific reporting solutions. IPSAS may be particularly useful in relation to those transactions that are for social benefit rather than for profit. Jurisdictional level standards may also be useful to address these gaps, particularly where they have been developed in a manner that is sufficiently consistent with the conceptual framework of IFRS standards and/or IPSAS. Given the huge amount of thought that has gone into the development of jurisdictional level standards, they may provide potential solutions not available in existing international standards. Using this proposed model, the NPO guidance would provide a full suite of financial reporting standards for NPOs. Where there is no requirement for a sector-specific reporting solution, and the IFRS for SME standard provides appropriate and sufficient guidance, the IFRS for SME standard would apply directly. Where a sector-specific solution is required, the guidance would utilize full IFRS standards, IPSAS, and/or jurisdictional level standards as appropriate in line with the proposed model. Looking back at the three assessment criteria, we believe that the proposed guidance model performs better overall against the criteria than any individual international framework. The proposed model will ensure that the guidance covers the key NPO-specific issues when no single international framework does, maximize familiarity and ease of use of the guidance by using frameworks with a shared conceptual basis and having a foundation of sector-appropriate reductions in accounting options and disclosures, and limit both the initial and ongoing resources needed for the guidance to be developed and maintained. Now you have the opportunity to tell us what you think. Amongst a range of issues covered in the consultation paper, We want your views on what do you see as the main challenges, if any, with the proposed guidance model and the use of the IFRS for SME standard as the foundational framework? And what, if any, alternative model and or foundational framework do you suggest would be more suitable and why? Please respond to the consultation paper. The consultation period for Part 1 ends on the 30th of July 2021. Shape the future, share your voice. Submit your response.